Good evening, Tradespooners, and welcome to tonight's pick for March 13th, 2014. We're taking a look at a position long in Packaging Corp of America, ticker symbol PKG. Scrolling down and take a look at our proprietary risk-reward rating here from Tradespoon. It comes in at a 3, so it's in the low end of that scale of risk-reward. And we're seeing the value momentum coming in at a 9, so that's on the upper end of the curve on that 1 to 10 score layout. Taking a look at the price action for ticker symbol PKG, our closing price was at, on the 12th, $72.08, which is right off of those 52-week highs of 75.10, and we're well above those lows of 42.20. Now we have seen implied volatility percentage pop up to that 25% level, so we're going to keep an eye on that. That just means that implied volatility is 25% higher than its 52-week implied volatility low. We're looking at the return on capital for the spread strategy at right around 43%. The probability of success for that strategy is right around 60% at this juncture. And we see that the estimated move right now is being calculated at $3.10 going into April expiration. Scrolling down and taking a look at the stock trade first, we're going to be buying stock PKG at a limit price of $72.08. Once we are filled at that price, we're going to put a sell limit above that entry order. So we're going to have a sell limit in at $78.50. We're going to work that good until cancel. We'll simultaneously put in a sell stop order, we'll sell stop limit order, and we're going to put that in $6.50 lower. So you're roughly going to be getting out right around that $75.50 level. And that would be a sell stop at $75.50 good until cancel. Now the options trade. Taking a look at this, we're looking to buy the April $72.50 calls, and we're going to pay a limit price of $175 or better. If we're filled at this limit price, we're then going to put in a good till cancel order to sell above that entry price at $3.50. So we're going to pay $175 if we're filled at that price or better. We're going to put in a sell limit order, okay, above our entry price. Specifically $1.75 above, so we're going to put it in roughly around $3.50, and that's going to be working good until cancel. Now we are willing to lose the full $1.75 that we put in through per contract, so use prudent size management, somewhere between 2.5% to top 10%. For you stock traders, use 3 to 5% of the cash available or percentage buying power. For the option spread trade, we're going to be looking at doing a bull put spread. And basically what we're going to do with the components here are we're going to sell the $72.50 puts and receive $2.10 per contract that we sell. Now we don't have no intention of owning this stock if we're doing this particular strategy. So we're going to buy some protection below the strike price of the put that we sold. So we're going to buy the $67.50 puts. Now those are $5 below where we're selling these puts, and we're going to pay 55 cents, which means that our net credit for this, in other words, the maximum that we're going to receive at expiration if the stock is above $72.50 is going to be $1.55. So that is our max gain, all right, is that $1.55 credit. Now that is not our max risk. Our max risk is $1.55, and we're actually only going to risk $1.55 in this trade. So that means when this particular transaction is trading roughly around $4, we can even say $3.90, we'll have a buy stop limit in there and right around $4 to close this transaction, just in case if the market starts to pull back, we want to get out of this strategy and not take the full hit. And as always, you can utilize our virtual trade here at Tradespoon and place any one of these orders if you're new to the service or if you're new to that particular strategy. Now scrolling down and taking a look at some more of the background and analysis of the stock and option pick, let's take a look at the action right now on the chart, and you can see that the stock has gapped up and been in an uptrend. Now it has been pulling back and it is testing those 10 and 30-day moving averages. We're going to keep an eye on that trend, but it still seems to be strong to the upside. Now we also look at the fundamental and components of this, and we also want to note one thing that's very important. We have a binary event, earnings, 428. Now that does fall into after the expiration of our options, but does not mean that we can't have some increased expectation of violent moves, especially if either the general market or the stock or some of its peers have earnings before it, or there's news out on the stock that could actually change the perception of potential risk or reward in the particular underlying. So keep an eye on it. And as always, we have the news and commentary as of this pick. So for now, that will be it. And as always, if you need any questions, considerations, answers, email us at info@tradespoon.com. Well, that's it for our pick, Long Packaging Corp of America, ticker symbol PKG. For now, have a great night, and we'll see you tomorrow.